Hey everyone, Gabe Galanti here at Rockline Wealth Management, here to talk about some exciting stuff that we saw in the first quarter of 2024. Resiliency is the key here. Just absolutely incredible to see markets and investors chugging along and staying strong in the face of adversity. So definitely want to highlight some things that we witnessed in the last quarter as we wrap up here, as well as highlight some things that we're looking forward to in the second quarter of this year. Bringing us ultimately to halftime and the hopefully a beautiful summer to come. First thing I'd like to hit on is just reflecting on the performance of the big three as far as the indices were concerned. Wrapping up in the first quarter of this year, we saw the Dow Jones return just a little over 5.5%. The NASDAQ came in at 9%, and the S&P returned just about 10% on the quarter. What makes that exciting is that last year, for 2023, we saw a major rebound in the NASDAQ, which ultimately blew the S&P 500 and the Dow out of the water. So to see the S&P 500 come roaring back and lead the start to the year, I think is a big deal. And that leads me into my next point here. Something that we might have heard over this last year and a half was the term the Magnificent Seven. These giant mega cap blue chip names in the tech space, which ultimately many critics said were leading the rally over time and ultimately proved not to be healthy. However, we are seeing the rally broaden out here. Some of those names are still leading the pack as we come into 2024, but there are a couple that are not. Tesla and Apple, for instance, two favorites by many, are having some trouble. They're facing some headwinds at this current time. But ultimately, I think that the bigger news is that essentially every sector across the board in the S&P had a positive return for the first quarter with the exception of real estate. So seeing that market breadth expand and seeing that strength really come forward is certainly encouraging. We're looking forward to where that goes. And again, seeing things like all of these sectors broaden out as well as small caps leading the charge is a great thing, in my opinion. So another thing that I think that we're witnessing is very interesting. The adage, a bull market climbs a wall of worry, and that leads me to my next point in looking at the geopolitical side of things going on in the world today. You have the situation in Ukraine and those atrocities still continuing and potentially looking to get heated up at times. We have this war in the Middle East. We have adversaries across the globe, and things are just they seem a little scary. With that, again, markets are shrugging that news off, investors are shrugging that news off, and it seems as though people continue to deploy cash, and you're watching the indices climb higher. Another positive part of what we are seeing and what we saw in the first quarter was the semi-annual Fed conference with Congress, where Jay Powell testifies as to what he believes is going on in the economy. And why I think that's interesting, first and foremost, there are no winners as far as being a Fed speaker or a Fed chair. Criticism on a daily basis. But ultimately, it seems to me if we can continue on this path, that maybe they haven't done such a bad job overall. The economy seems to be continuing to chug along a little bit at a time. Ultimately, inflation does seem to be coming down a bit. We are hitting a little bit of a stubborn patch. But as Jay Powell referenced during his testimony, he does not see that the U.S. economy is going to fall off into recession. He does see that it might become a little harder to achieve that last little bit of disinflation to get down to that 2% number. But he also did speak about and hit on the fact that they still are in the mindset that rates should come down as we do approach that 2% rate of inflation. So ultimately, you know what? We completely shut down the world economy during a certain point a couple of years back. We are restarting the world economy. We have. And things are not as bad as many have forecasted that they could be. Just to continue that point, the Fed actually had their first FOMC meeting of 2024 in March. They ended up keeping rates unchanged at 5.25% to 5.5%. And again, I think along the same lines as the Fed speaker Jay Powell is speaking about, that ultimately we're all looking for inflation to come back down a little closer to that 2% target before they cut rates. Going into this year, many people might have been caught off sides, talking about potentially upwards of 6 to 7 rate cuts through the year. It appears that may not be the case at this point. And ultimately, you might be in the camp and have the opinion that it's not a bad thing for rates to remain where they are if they're not terribly restrictive and the economy can still chug along. Ultimately, again, I think investors are responding positively. They're deploying cash, whether that's into stocks or bonds. We're seeing the economy continue to move forward, and there's always that potential that rates will start to taper off towards year end, and at that point, it is my belief that you will see more cash come into play as far as getting invested within stocks and bonds, which could be a great thing for investors going forward. Final thoughts here in this election year, in a year that many people are fearful for many different reasons. Again, hitting on the fact that a bull market does climb a wall of worry, in addition to the fact that there are many presidential years looking back in history that we have had positive returns. So ultimately, as I sit here today, I think that the future is bright. I think that the market still has a little room to run. I think that the economy is going to continue to improve and interest rates will come down and steady off over the course of time. And at the end of the day, I am a strong believer that as long as companies are earning money, markets will remain in an okay spot. So with that, we thank you all for listening. Hope you found some of this helpful. Cheers to a successful first quarter of 2024, and we're looking forward to what the second quarter has to offer. Have a great day.